as you're looking for opportunities here to the upside, you need to be cautious with regards to the valuations that the companies are trading at and whether or not you believe that those valuations are justified or whether or not they can continue to expand in terms of valuations given the outlook that you have on each individual company. Now, one of the things that I think is this is more so kind of, I would say, a feature of kind of how high the bar has been set. But so far, 81% of the roughly 6% of the S&P 500 that's reported have beat on EPS, have beat on earnings, but only 56% have beat on revenue. So that EPS number is coming in very much around average, but that revenue number, only 56% of companies beating on revenue is coming well below average. And this is really where, in my opinion, the risk starts to lie, right? Because earnings, to some degree, you can manufacture. You can reduce your spend, and that kind of increases your earnings. So you can reduce expenditure. What you can't really manufacture is revenue, right? You either have the revenue or you don't. Even though revenue, the bar is set pretty high, 4.7% revenue gain year over year is nothing to sneeze at. But that bar being set so high, a lot of companies are failing to meet that bar. So this is really where you see it in the reactions, right? Stocks that beat on earnings actually on average declined by 20 basis points. Normally you see stocks that beat on earnings at the very least have a positive reaction, at least on average. But right now, so far, even though it's very early in the quarter, so it's hard to say that that's where we're going to end up. But and we have seen this previously, especially in 2023, we saw a lot more of this, where even when stocks beat on earnings, they actually saw either no move or actually a small decline. And stocks that missed on earnings, so far coming in very similar to last quarter, down about 2.9%. So that further kind of what's the right word? Influences your views, or should influence your views going into earnings with regards to kind of what type of opportunities do you chase, right? Because stocks that beat on earnings are not rewarding you with big moves here to the upside on average. But stocks that miss on earnings are seeing some substantial moves here to the downside. So that kind of skews your view in terms of what you look for in terms of opportunities, because beats are simply not going to give you that big move here to the upside. At least so far, what we've seen in the quarter, it's not producing that. So it's important to understand that metric going into the earnings season. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. So earnings season so far, off to a rocky start, I'd say. Decent start on the earnings side, a rocky start on the revenue side, and revenue is really kind of the part that you can't manufacture. And there are some signs of weakness, in my opinion, on the revenue side of things. And that, reflects also kind of and also at the same time when the S&P is trading at such high multiples, the downside risks, I would say at the moment, are higher than the upside risks.